Most purchases used to have a simple rule. First, you earned the money. Then, you decided whether something was worth buying. That order quietly kept desire and reality connected. Today, that order has been reversed. Somewhere over the last few years, an invisible marketplace appeared. Not for products, not for services, but for your future paychecks. Every time you tap Pay in 4, 0% today, no payment until next month, a tiny piece of income that doesn't even exist yet is quietly being sold. You don't notice it because nothing feels different. Shoes arrive, the headphones arrive, the furniture arrives. Life looks exactly the same, except something invisible has changed. You now owe a version of yourself that hasn't even gone to work yet. And that's where the real story begins.
For decades, debt felt heavy. Applying for a loan meant paperwork, a bank, questions, waiting. The process itself created friction, enough friction to make people stop and think. Today, friction has become the enemy. The modern economy doesn't want you to pause. It wants buying to feel as effortless as scrolling. That's why buy now, pay later isn't designed to feel like borrowing. It's designed to feel like shopping. Notice the language. You rarely see the word debt. Instead, you see flexible payments, easy installments, interest-free. Split your purchase. The vocabulary changed, but the mathematics didn't. Whether money leaves today or next month, it's still your money. Now, it's scheduled before you've even earned it.
About what happens on payday. Most people believe their paycheck arrives complete. It doesn't. Long before it reaches your account, parts of it already have owners. Rent, insurance, phone bill, streaming subscriptions, car payment, student loans, utilities. Now add something new. Last month's sneakers, smartwatch from 6 weeks ago, the vacation you booked in 4 easy payments, sofa that looked affordable because each installment seemed small. Individually, none of these feel dangerous. Together, they begin competing for income that hasn't arrived yet. Your paycheck starts feeling smaller without your salary ever changing. Here's what's fascinating. The success of buy now, pay later doesn't depend on making products cheaper. It depends on making payments smaller. Human brains naturally focus on immediate pain. $1,200 purchase feels expensive. 4 payments of $300 feel manageable. Not because the item costs less, because your brain compares each payment instead of the total commitment. Similar to walking into a room with the lights dimmed. Nothing inside has changed, only your perception has. The number became easier to accept. The obligation stayed exactly the same.
Another psychological trick happening, one that's even harder to notice. Every payment you postpone creates the illusion that your future self will be wealthier, almost like you're making a deal with someone else. Next month's version of you, next year's version of you. Problem, the person is still you, with the same rent, the same grocery prices, the same unexpected car repair, same rising insurance bill. Future rarely arrives with extra money waiting. It usually arrives with new expenses. The financial system quietly encourages us to believe otherwise. Now, imagine this happening across an entire economy. Millions of people buying tomorrow with income from next month. Retailers sell more, apps grow faster, checkout pages become smoother. Everyone appears to win, at least at first. Then inflation pushes everyday costs higher. Housing becomes more expensive. Groceries creep upward, energy bills rise. Suddenly, those small installments, which once felt invisible, begin competing with necessities. Not because any single purchase was catastrophic, because dozens of tiny promises slowly gathered in the background. Like browser tabs left open for months. Each one uses only a little memory until the whole system starts slowing down. The numbers aren't dramatic.
That's exactly why they matter. Imagine 5 different buy now, pay later purchases. Each one costs just $80 a month. None feels excessive. Together, that's $400 every single month. Nearly $5,000 every year, not spent on today's decisions, spent honoring yesterday's excitement. And once those payments become normal, new purchases start fitting around them. The cycle quietly expands. Not because people lose control, because humans adapt surprisingly fast. Once felt temporary, soon feels permanent.
This is where the trap becomes difficult to see. Buy now, pay later isn't really selling products. It's selling timing. It separates enjoyment from payment. The brain celebrates today. The wallet negotiates later. When those moments become disconnected, buying naturally increases. Not because people suddenly became irresponsible, because the experience of spending no longer feels like spending. Financially aware people notice something different. Don't automatically ask, can I afford the monthly payment? They ask, how much of my future income is already spoken for? It's a subtle shift, but it changes everything. Instead of protecting today's bank balance, protect tomorrow's flexibility. Because flexibility has value, a surprise opportunity, career change, moving to a better city, starting a business, taking time off. Those options become harder when future income has already been assigned to yesterday's purchases. To them, the most valuable paycheck is the one that still belongs entirely to the future. Maybe that's the biggest illusion of all. Buy now, pay later doesn't simply divide the cost of an item. It quietly divides your financial freedom into smaller and smaller pieces. Pieces so small, you rarely notice them leaving. Till one day, your paycheck arrives and somehow already feels occupied. Not because you earned less, because your future was gradually rented out, one easy payment at a time. The invisible marketplace was never selling products. It was trading tomorrow for convenience today. And once you notice that, difficult to see those 4 little payment boxes the same way again. If you enjoy seeing money from a different perspective, consider subscribing.